Tony Nash, how are you, buddy? A lot has happened since you and I talked 3 months
That's
ago.
right. Thanks, Dale. I
So,
appreciate this.
so Tony Nash, his company is Complete Intelligence. He's been utilizing AI before it became popular, right?
That's right. Yeah, we forecast about 1,800 items in markets, and we've been doing that for quite a while. And when you say utilizing AI, just so that people understand, we don't have analysts who change the prices in our forecasts. Regardless of what I think personally, we let the models speak for themselves and we publish our error rates on everything that we forecast. So, yeah, we have been. I didn't intend to be an AI company. I just wanted to be a data-driven company, and we've actually turned into an AI company over the last 5 years. One of the things I'll let you and your audience know is we're just releasing a product called CI Markets Alpha. So CI Markets is our baseline product, monthly interval forecasts. CI Markets Alpha is a product we're selling to trading desks, and it's daily interval forecasts. So I'm not sure if that's up on the website yet. It may be today or tomorrow, but we're selling that to professional trading desks, and we're doing daily intervals, showing our error rate so people understand the risks associated with the trades they're making. So I'll stop my pitch now, but I just wanted to let you guys know about that.
Okay, did the product come because of the times? Because, we were in trending markets, a lot of trending markets for a while, but now that volatility has picked up everywhere with, uh, you know, tape bombs and truth tweets and everything else going on, that people are maybe gravitating more towards shorter term time frames to trade.
Yeah, it's interesting the interval expectation for reforecast, Dale. So, before COVID, we would do our forecast once a month. They were monthly intervals. And I came out of The Economist and I came out of IHS Market and all this stuff. And people there did quarterly forecasts or monthly or whatever. With COVID, we started doing twice monthly, and then we started doing weekly 3 years ago. And then our professional subscribers started pushing us to do daily interval. And yeah, with the volatility that we have, daily is critical for people. So our
Yeah.
subscribers get the daily forecasts on Sunday night so they can plan their trade for the week ahead. And so every weekend they get a new daily interval forecast for the week ahead and the next 20 trading days to understand direction.
And I do recall from our last visit, so I have to go back a ways, but I believe we are talking you had 109 euro for a target.
Yeah, we did.
Well, is that true? Three,
Yes,
four months
sir.
ago is my memory, because I'm kind of old.
Yeah, we
So,
did. So am
all
I.
right, I'm just my memory works better remembering other people's trades than why did I come into the kitchen for what reason? Anyway,
I
but I
get
can
that.
remember I can remember everyone's trades. So great call.
Thank you.
Um,
Yeah.
I think the big surprise, based on recency bias, is that everyone probably thought that if we had risk off, that the dollar would be safe haven again. And we talked about it here at Forex Analytics that this time, and this was before the market top, that it could be about outflows and confidence going a bit here for people to start repatriating. Because the euro bottomed a long time ago, 102. I mean, it was well, that we bottomed at 101.70 back in December. But do you look for a continuation of this move in the dollar? Pretty powerful move last week.
Yeah. I
Yeah,
think it's
go
it's
ahead.
easy to forget that when Trump left office in 2021, Jan 2021, the Dixie was at like 96 or something. And so, it's not, I don't think he's afraid to have a weaker dollar,
No, he
especially,
wants it.
yeah,
State
and yeah, and
stated
that's
policy.
something. Yeah, we need to be prepared for that. And when you look at the trade discussions he's having, one of the tools that he and his team have is a weaker dollar. And I don't think that's something that is, I mean, that's not kind of an amazing breakthrough call there. That's just looking
Yeah.
at history. It's looking at the current discussion that's happening around trade. It's also looking at what's happening with bond yields and what Basant's going to have to facilitate in order to get lower long bond yields.
Okay, so I've been talking about yields. I'm kind of on the other side of the trade. Um, the boon rates are of course leading. So again, another sea change that the differentials have been moving in favor of Europe, and that's why one of the reasons why euro went. But to me, it looks like Basent better get some note buyers in here,
Oh yeah.
because if we get through here, I could see 450 for maybe a right shoulder, and I can't even rule out it taking out those highs. Where are you at on yields? And also, just to back it up, with all the risk off that we had, Tony, and
Mhm.
all the weak economic data, to me, bonds are acting lousy, and when it should have been a tailwind.
Yeah, and I think we're going to have to see more downside in equity markets for
Yeah,
bonds to rally.
yeah,
And so, your previous
yeah, a lot.
conversation was people saying, "Hey, I don't think this is over yet," and I'm with them. I don't think this pullback is over yet because we need bonds to rally in the U.S. so that those yields fall. And so, because why do we need yields to fall? Well, because we have commercial real estate that is very problematic. We have
Yeah.
residential real estate that isn't necessarily growing at the rate that people want in terms of
No, it's
prices.
a problem. They, and people can't
Yep.
tap their equity. First of all,
That's
they
right.
don't have as much equity
That's
as
right.
they did a
And
year ago.
right. And
Anyone,
so
go ahead. Go ahead.
your audience will appreciate this more than anything, but equity rallies is a narrow-based wealth effect, relatively narrow. Home rallies are a broad-based wealth effect. So if we look
Okay,
at
cool.
kind of the Trump philosophy, they're looking at a very populist, broad-based wealth effect, and that's what they want to bring back into market. So they're less concerned about equity markets than they are about long yields at this point.
Okay. So we'll see. I think the next few days are critical in the bond market. Do you have a view? Are you telling people to be long bonds?
I think at this point where, you have to be really careful about that, but I think, yeah, I would have a longish bias for bonds right here, because I think, Basan is a pretty determined, smart guy. So, we're going to have a longish bias for bonds here. But as you said, the next week is really critical in understanding how these markets break.
Yeah.
And if we see equities continue to push lower, then that's a real opportunity for yields to break and start to fall, especially the long yields.
What if we get I always ask myself, if a market's not acting great when it has a tailwind, if we have some type of corrective move, and it wouldn't have to be a lot, that should pressure the bonds,
Yeah, you're right.
right?
So,
So,
yeah, I think we really have to watch how much, let's say, the S&P is going to rally into the end of the week, right? So are we going to see a real strength come back before the end of the week? I don't really think so. I think tariffs, to be honest, are kind of a distraction for what's happening in the bond market. So that yeah, I think this tariff thing is, and I've gone into a lot of other interviews to help people understand global trade and how sophisticated that is and how complicated that is. The discussion that the Trump administration is trying to have is a very complicated discussion. The bias in media and banking and other thing is that Trump's an idiot and he just doesn't understand trade. And if he did, he wouldn't be doing this. It's like, no, I actually think he does understand trade. Whether he does or his advisors do, it doesn't matter. And it's a very sophisticated discussion to be having because effectively what he's doing right now is having an entire WTO negotiation round in like 3 months, right? So I don't know if you remember like the Doha
I
round
do.
of the
Yeah.
WTO. That was like a 10-year discussion that all these people had, flying off to nice resorts and hanging out and, whatever, incremental progress over a decade. Trump's doing that in 2 to 3 months. So he's restructuring global trade over some uh, some items to, frustrate and disadvantage his counterparty, and really restructure global trade, very, very quickly. These guys
Okay,
are figuring it out.
keyword, restructure global trade.
Yep.
So what comes with that is a change in how the supply chain is going to work. Isn't there an issue with people changing shipping routes and everything else that we could have bottlenecks, shortages, problems with taking apart a 40, 50-year trade system, taking it apart and starting over? Doesn't sound like there could be a rocky transition during that process, right?
Well, I've heard statements out of the White House saying that we may have some short-term pain, and I think when people hear that, they think that's a justification or an excuse or some sort of backpedal. I actually think the basis of what's happening is this: there are a lot of subsidies and non-tariff barriers in global trade. So under the GATT, which was the predecessor to the
Right,
WTO, the average tariff was 35%. Okay. Under the WTO, the average tariff has been 2.4%. But what's happened? We've had a massive proliferation of non-tariff
right,
barriers, which are largely regulations and subsidies. And so what the administration is trying to do is to get that full cost on the table: subsidies, non-tariff barriers, and tariffs. So what the administration is doing is going across and saying, hey, we're going to equalize. So because you have these subsidies, non-tariff barriers, we're going to equalize that cost for you. And we're going to raise tariffs so that this is a very transparent negotiation. Now, I believe what they're trying to do is, of course, they want manufacturing in the US, but I think the reason Scheinbaum is playing ball in Mexico is because some Mexican leader realizes that China is a direct competitor to Mexico. And so what the administration wants is a lot of that stuff that happens in China. They're happy for that to move to Mexico. And Scheinbaum is in the middle of that, and she's going, wow, okay, I finally get it. And so she's playing ball and not doing retaliatory tariffs on steel and aluminum because she understands that a lot of manufacturing is going to come Mexico's way as China kind of falls out. Now, Dale, here's a big issue that I want your guys to understand, and this is driving a lot of this. We're at a place in global manufacturing where automated manufacturing with AI, so the
yeah,
next generation of factories are going to be AI driven.
robotic,
Exactly. And so a lot of the labor arbitrage that China has had will erode over the next 5 years. And so the administration understands that all of these manufacturers have to invest in new plants. So if they invest in those new plants in China, it is there for the next 20 to 30 years. If they act aggressively now and get those new AI driven factories in the US to stop that labor arbitrage in China, then that element of GDP is captured in the US. That economic value add is captured in the US. And so this is a generational point because during COVID, people realized what an issue having a China-centric global supply chain is, right?
right,
And so
right.
they're thinking, yeah, it's possible and helpful to have something outside of China. But then we have this AI boom that is saying, and I know that a lot of the guys like Microsoft and other guys are working on automating big factories. And so that generational change is driving the investment. So we have these 500 billion and trillion dollar,
Yeah, from
$100 billion
Apple.
investments coming into the US.
Yeah.
That's the real opportunity. And I'm certain that that's what these guys are pitching to these large manufacturers.
Okay, so what's the time involved for Apple to get something like that built and operational? And Tony, it all sounds really good. I mean, we've been hollowed out. I grew up
Yep.
in the Midwest. I
Yep.
know what happened to people in the Rust Belt. Okay,
Yep.
how they struggled under the new paradigm. Uh, but is it possible that we're too vulnerable short term? We need things that China makes. And this reshoring effort, I mean, conservatively, 4 years, 2 years, if there, it's a matter of years. And can China any day, like today or tomorrow, and say, we're not sending you what you need for pharmaceuticals? Oh, your transformer went out. We don't make them here in the US, and China goes, you can't have that transformer.
Great.
So aren't we very vulnerable during the transition of this plan?
I think if that happened, that would be perfect because that would force US consumers and, say, assemblers, people who buy parts from overseas, that would force them to contend with the fact that China is not a good faith partner.
Yeah,
So, and this is why they keep saying short-term pain. China may do that, but what I've been saying since election night, and Albert Marco and I do this podcast every week, is that China will aggressively resist Trump's uh, calls for different terms of trade. They'll aggressively resist it for 3 to 6 months, okay? Because they're nationalist. There is not a single Asian government that is not nationalist. So China will resist it for 3 to 6 months. Then after that time, they'll publicly align with what the US is doing. Okay. But they
wow,
have to publicly resist and then they'll
right.
align because they'll realize that no matter what they do, the US will move around it. There's a lot of pharmaceuticals manufactured in India, and that's growing very quickly. And if you notice, PM Modi was one of the first
Yeah,
people that Trump had to the White House. So when we have those pharmaceutical APIs produced in India, manufactured in India, and then
yeah,
you have the final, say, combination made in the US, is that something we can live with as a country? Yeah, possibly.
yeah. I tell you what a great explanation. Let me wrap it with this. Do you believe, there's still a lot of bulls out there. A lot of bulls didn't get short. Even the ones that wanted to get short were looking for 6,400. And the super bulls were looking for 7,000.
Mhm.
Do you still think that's I would think that you think that's a possibility still and that this is a correction. Am I reading you correctly?
I think that's still possible, but yeah, I think we have to have the equity correction so that yields are forced down.
Okay.
That's the kind of macro statement that we all
What
have
do
to
we
make.
need? What level in the S&Ps is going to take the 10-year, say, back down to 3% or two and a
52,
half?
53, 52, 53. You
Okay.
know, I, I, I don't think that's too far from
No,
here.
yeah,
And
it
I
isn't.
think you get capitulation at that point, and you have a lot of transition into bonds at that point.
Okay. All right. Well, I encourage anything else you want to wrap with. How about oil, which everyone hates? Are you in the camp that we're, because of demand being weak here in the US and China, that oil prices are going to continue to decline? Or is there a contrarian long coming up here?
I would give probably a 30% chance of a long, but I think with the OPEC Plus announcement and I think the possibility of a Russia-Ukraine deal, that I think a likelihood in 2 to 3 months that we have a lot more supply coming on markets. And so, I think my bias is for a
Down.
downside in crude markets, not dramatic downside, but downside. And the administration is pushing heavy for that in case China says we're not going to ship you X or whatever, right? So they have to push energy prices down so that affordability isn't impacted too much.
Okay. You seem to have a real handle and a belief in what's going on with the new administration. So, if you're a stockbroker, it says know your customer, right? That's a number one rule. Know your
Yep.
customer. So let's say we know our customer, President Trump. Do you think that he's going to let it go with his belief that Iran is behind assassination attempts and that they still want to take him out, and that Netanyahu has been on a lifelong mission to make sure that Iran doesn't have a nuke. Is there going to be a geo event? President Trump, you could say everything he's doing economically is great, but he really doesn't have the personality to, just let it go, let it slide. Do you think we're going to hit Iran?
I don't think we will have a major conflict with Iran. I think part of the triangulation that he's doing with Russia is to impact Iran. So he's
Okay.
trying to hit Iran in a confrontational way with Israel, and he'll also try to hit Iran in a kind of uh, kind of friend of a friend way through Russia.
Okay.
And I think that is the bigger driver of the discussion with Russia than Ukraine. I don't think, Ukraine is not a massive strategic location for the US, at least according to
Right.
most Americans. So I don't think Ukraine is the main discussion underway. I think Iran is the real focus in that discussion, and Ukraine is kind of a byproduct. I'm sorry, that's not a
Is it?
popular opinion,
Okay. Well,
but I
then
think that's
Israel's just going to have to learn to adjust to Iran being a nuclear power.
maybe. And
Okay.
I mean, we have India, Pakistan
Yeah.
25, 30 years ago that happened. And, all it
Yeah.
did is create a better relationship between the two.
Okay. I'm telling you, this guy sees the glass half full every time I talk to Tony. You you're on the wrong show. I'm kidding you. Uh,
I can
it's
see
great.
that a lot of the comments, a lot of your viewers think that I'm dumb. But here's just a little bit of background.
Is that what they're saying?
I lived outside of the US for 25 years.
I
Okay. I
dumb.
lived in Europe, I lived in Asia. I've done business with a lot of the governments around the world, including the Chinese government. I've spent a lot of time in the Middle East. So, I don't, my view is not necessarily kind of a happy clappy view. It's a pragmatic view. And I think at the end of the day, most of these leaders will have very tough rhetoric, but at the end of the day, they're pragmatists. Because in some of these countries, if they're not pragmatists, they're dead. I mean, in China, if Xi Jinping is not a pragmatist at the end of the day, he doesn't live much longer. So in Iran, the same thing. These tend to be very aggressive regimes because if they don't serve their people on some level, then they're not going to be alive.
Okay. All right. Well, Tony, I enjoy your insights every time I get to talk
Thank
to
you,
you.
Dale.
And, I would encourage people to check you out and check out Tony's new product that he's coming out with. If trading desk institutions are looking at this stuff, maybe you should too. And Tony, I hope you have a great next quarter. And you and I be talking this summer in June,
Thanks,
hopefully.
Dale. I appreciate this. Have a great
Oh,
day.
all right. Tony Nash, nerd. And everyone should have a nerd like Tony for their intelligence gathering. All right. That's a
Thank you,
wrap,
Dale.
all right, buddy. That's a wrap, everyone. Don't just count your pips, count your blessings. Could join the team in 18 minutes on the morning edge. Tony, nice to see your name in here. I wondered what happened to you. I hope you're okay. I've noticed that Saloom hasn't been in here lately. So, anyway, have a great day, everyone. TGIF tomorrow. And we have Dick Matthews with us to wrap the week. So, you're a fan of who? Tony Nash? All of us. All right, Tony. It's great to have you here. All right, everyone, have a great day and see you tomorrow. TGIF will wrap it up. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.